To keep yourself updated, subscribe to Indigolearn and click the bell icon and download our app OneFin to start learning on the go.
Hello my dear friends, hope you guys all are doing wonderful and great. And this video is specifically, my dear friends, to talk about the paper review of CA Inter Indirect Taxation November 2022 exam. And the students who have written the exam, I'm sure they would have been slightly surprised, amused, and at the same time felt happy also. The reason being very clear that there were some set of questions which came in the exam which were slightly quite unexpected, because some topics which we generally keep thinking that it won't come in the exam, even they have popped up in the exam. So that's something very interesting, and that shows the quality of paper. But I feel extremely glad and happy to share with all of you guys that every topic, whatever has come in the exam, has been discussed extensively in our discussion, and there's nothing out of what we have not discussed. Everything which has come in the exam is something out of what we have discussed very specifically in our discussion. So I feel very proud and happy about it. So now let me spend a little bit of time with you guys on spending some time on understanding about what kind of questions have come in the exam. What is that all about? We are talking about the CA Inter November 22 paper with respect to indirect taxes. Come on, my dear friends. So let me share the screen, my dear friends. And the students who are writing exam and still continue writing group 2 exams, I suggest that you watch out this video after you finish your exams so that you will not divert yourself and miss out on any point, because it's very important that you stay focused on your exams. And those who are writing just group 1 exams and done with the exams, having some free time, watch out just to feel good about it. Clear, my dear friends? Wonderful. Chalo guys, it's time to spend time with Shivateja to understand what kind of questions have come in our paper with respect to indirect taxes of CA Inter November 22 exam. So let me start the discussion, guys. Come on, see your friends. Yeah, first question, and I've been given to understand from the students' feedback that multiple choice questions which have come out, they have been quite comfortable, and there was no concern with respect to multiple choice questions. They could happily answer the questions because they were quite comfortable and very easy. That was a very good positive feedback. What I've heard, that MCQs were not difficult at all. They were straightforward, pretty comfortable, and pretty easy also. But students have slightly felt the theoretical part little bit difficult, maybe because it was slightly unexpected, because students have a mindset that from ITC this question will come, from registration this question will come, composition this question will come. That mindset is already fixed with the student. That is the reason why it might slightly feel that a different kind of paper has come. But even in this paper also, some questions were pretty simple and pretty straightforward. Now, what is that question which have come in the exam? Let's look at them and understand and try to evaluate how do we tackle these questions in the exam and what you have done in the exams. See that. Ajay Limited, a registered dealer in Patna, Bihar, is engaged in various types of supplies. Come on. Outward supply of goods made during the month, various non-related persons in the state of Bihar. If it's in the state of Bihar, what is it, my dear friends? Intra-state supply, and they have given market value 3 lakh, transaction value 4 lakh. We are never concerned with market value. We are concerned with transaction value. And on this transaction value, we will charge CGST and SGST, obviously because it's an intrastate supply. And second one, intrastate supply directly charge what, my dear friends? IGST. And it is non-related persons, so we are not concerned with market value at all. We are only concerned with transaction value, because value of supply should always be transaction value. That is price paid or payable when supplier and recipient are not related and the price is sole consideration. Next point. Service provided to state government of Karnataka for conducting a training program for its employees. Total expenditure incurred per program was 90,000, of which 63,000 was borne by the state government. An interesting concept from the exemptions. In exemption, there is a point that in case of services of training program to central government or state government, in which 75% or more of the expenditure is borne by the government, it is exempt. On that particular point, they cover this. And expenditure was 70,000, 90,000, 63,000 was borne by the government. That is only 70%. Getting clarity, my dear friends? That is how they tested one point in the exam related to the exemptions. Then, stock transfer without consideration. So what? Still it is a supply, because we know the concept of section 7(1)(c), read with schedule 1, transactions regarded as supply even though there is no consideration. and the branch has separate GST number for convenience of accounting and billing. 20,000 added to outward supplies. Then intrastate inward supply of various services for use in the course of furtherance of business. This is related to your input tax credits. Next point. All the amounts given above are exclusive of taxes. Wonderful. Very good. Next. During the course of arranging and filing documents, accountant of ICAI Limited observed that an invoice of 30,000 dated 2nd December 2021 was omitted to be recorded in the books of accounts and no payment was made against the bill till the end of Jan 2022. Okay, very good. And invoice was issued by Mukesh of Patna, from whom ICAI Limited has taken cars on rental basis. Oh my god, this is basically renting of car. And in case of renting of car, my dear friends, it is a block credit. Renting of car is a block credit under section 17, subsection 5. So getting clarity, everybody? And once it's a block credit, there is no question of claiming credit. Then, what is the rate of GST given? Car rental service, anyways, no credit. Other inward outward supply, 9%, 9%, 18% GST rate. Then, no opening balance of ITC exists as on the beginning of the month. Finally, out of 30 invoices of inward supply received, 6 invoices with value amounting to 1,50,000 were e-invoices, in which IRN was not mentioned. Once IRN is not mentioned, then it is not a valid invoice. If it is not a valid invoice, then input tax credit cannot be claimed. However, all the invoices were duly reflected in GSTR 2B for the month of Jan 22. Since suppliers have filed their GSTR 1, so what? Even though supplier filed GSTR 1 and reflecting in GSTR 2B, still we cannot take credit because there is no IRN on the invoice. Once IRN is missing in the invoice, it becomes an invalid invoice. Once the invoice is not valid, there is no question of claiming input tax credit. Subject to information given above, condition necessary for claiming ITC were compliant. Calculate net GST payable. Net GST means output tax less input tax credit. Set off the credit, you'll get your answer. A very brilliant and interesting question which came in exam for about 8 marks, my dear friends. Something scoring, not that we can't do it. Next. Generally, it is a very common tendency that a first question will always come from net GST payable, where they give output tax, will reduce input tax credit, net only will pay the tax. Next. This question was slightly unexpected because the question was related to DCA, that is Del Creditory Agent, which we done in our discussion that whenever in a case where the goods are transferred by principal to agent or agent to the principal, it is regarded as supply even though there is no consideration, because it is covered in section 7(1)(c), read with schedule 1. But DCA is somebody who undertakes responsibility to recover the outstanding balances. And if required, he gives sometimes short-term credit to the buyers. And that is a separate activity altogether. See now, Charm Limited, registered under GST in the state of Jharkhand, manufacture cosmetic products and appointed Mr. Handsome of Mumbai, who is registered under GST in the state of Maharashtra, as their Del Creditory agent to sell their product. Being a DCA, he agrees to raise this invoice in his own name and also guarantees for realization of payments from customers to Charm Limited. That is what DCA does. Then, in order to realize payment from customers on time, he extends short-term transaction-based loans to them and charges interest for the same. And let me tell you, this interest is exempt. The reason being, service by way of giving loans and advances where the consideration is interest or discount, that is straight away exempt under GST law. Next, goods sold by Mr. Handsome in the DCA capacity, that will be taxable. Next, interest earned from above customer for short-term credit facility for timely payment of dues, this becomes exempt. Commission bill raised on Charm, this is also taxable. Next, inward supply, intrastate supply of goods received from Charm Limited. Since being a DCA, no consideration was charged, but still this will become taxable because of section 7(1)(c), read with schedule 1. So this becomes inward supply. On that, calculate GST and take input tax credit. Next, receive training in marketing and distribution from Charm Limited as per a DCA agreement free of cost, and the company charges 75,000. This is also taxable because of 7(1)(c). calculate GST payable, take input tax credit. So first point, we will calculate output GST. Third point, calculate output GST. These 2 points, calculate input tax credit, set off that credit and calculate net GST payable. That's it. Applicable rate of taxes on both inward outward supply is 9% each, IGST 18%. Amounts given above are exclusive of taxes wherever applicable. Subject to the information given above, necessary conditions are complied with. For availment of input tax credit, you are required to calculate the gross GST liability and eligible ITC for the month of March 22 of Mr. Handsome. That's it. Calculate output tax liability, calculate net input tax credit, then set off that credit. You will also get the answer for net GST payable. Getting clarity, everyone? A very, very interesting question. The only point is that generally the del creditory agent concept doesn't come in the exam. So for the first time, it came as a surprise in the exam. So that's why student might have slightly felt that what is this kind of different question which came in the exam. But let me honestly tell you that it's a very interesting and comfortable question. Not that it is difficult at all. Make sense, guys? Brilliant. Next point, my dear friends. Answer the following after reading below given 2 paragraphs. Discuss relevant provision, decide the correct conclusion, determine the validity. Come on. Raju is engaged in manufacture of fly ash bricks in the state of Kerala. He started his activity in the month of April 2022 and deals only in intrastate. His tax consultant advised him to register under composition levy under GST as Raju's turnover is expected to be below 1 crore for the said financial year. Straight away, my dear friends, as per section 10(1), manufacturer of certain notified goods cannot opt for composition scheme. And that notified goods earlier were pan masala. First one was pan masala. Then next one was tobacco and tobacco substitutes. Then aerated waters. Aerated what, my dear friends? Waters, tobacco and tobacco substitutes. And then we had a concept of, this concept basically there were some notified goods for which this composition scheme was not eligible. Pan masala, tobacco substitutes, ice cream and other edible ice, whether or not containing cocoa. And next one was aerated water. And recently they made an amendment and brought into picture about fly ash bricks also. So a manufacturer of fly ash bricks cannot opt for composition scheme. So this statement is not valid. That he can take for composition scheme is absolutely not valid, because a manufacturer of fly ash bricks cannot opt for a composition scheme. Next. Darun provides services as a business facilitator to Zero Bank Limited by facilitating in opening of bank accounts to villagers in rural area in Punjab and earned commission of 22 lakhs in the month of April. Friends, let me tell you that is actually exempt. Service by business facilitator to a bank in relation to accounts in rural area, that is actually exempt. So far, he is not registered under GST. Darun's consultant advised him that he is liable for GST as his turnover exceeds 20 lakhs. So what? Still, it is not required, because any person, as per section 23, if a person is dealing exclusively in exempt supplies, he need not take a registration. Getting clarity, friends? That's it. This was a pretty simple and very, very easy question. Next point. 7A. I felt this question much more easy, because in this question, they only asked about whether required to get registration or not. Just calculate aggregate turnover, get your answer. Clear, friends? Outward supply of petrol, include for aggregate turnover. Exempt goods, so what? Include for aggregate turnover. Outward supply of taxable goods by his branch in UP. What will happen, my dear friends? Outward supply of taxable goods by his what? Branch in UP. This is also included. Next. Outward supply of services on which tax is payable under RCM by recipient of service. So what? This is also included. Inward supply of RCM on which tax is payable under RCM. This is not included. And whatever I'm writing here is all based on section 2.6, which defines what is aggregate turnover. Aggregate turnover covers all taxable supplies, exempt supplies, interstate supplies, and exports on all India basis under same ban, but does not include value of inward supplies on which the recipient is liable to pay tax under RCM. So 4 plus 2, 6. 6 plus 5, 11. 11 plus 6, 17 lakh. So when it is 17 lakh, technically registration is not required. because we're talking about the state of Orissa. Getting clarity, my dear friends? All of us, registration is not required. That is my general answer. But one point, let me tell you, since he is required to pay tax under RCM, registration becomes mandatory because of section 24. That is compulsory registration. In that one point says, person required to pay tax under RCM, for him registration is mandatory irrespective of threshold limit. Irrespective of turnover, registration is mandatory for such kind of person who is required to pay tax under RCM. Next point. Come on, guys. Pranesh has deposited a sum of 5,000 rupees under the head of fee column of cess, and 4,000 was lying unutilized under the head of penalty column of IGST. Both the deposits were made wrongly instead of deposit under a head of fee column under SGST. In light of provisions of 4910 and 4911, briefly explain relevant provision as how can Pradesh rectify these errors. We have spent too much of time on this, where you can happily file GST PMT 09 and you can transfer balance from one head to another head. And it is easily possible to transfer from one major head to another major head, one minor head to another minor head, and then utilize the balance in cash ledger. So this facility of transferring balance from one head to another head is only in case of cash ledger, but not in case of credit ledger. Very, very interesting and important concept, my dear friends. A very beautiful discussion what we have done in our discussions. Next. Sakura Enterprises made an interstate supply of taxable goods valued at 47,500. Come on guys, how much is the value? 47,500. And exempt goods values at 2,000 rupees. And rate of GST for taxable supply was 6%. Determined with brief reason whether reliable generation is mandatory for above supply made by Sakura Enterprises. 47,500 is before GST. And GST rate they gave 6%. Slightly different point, because generally GST rate won't be 6%. It should ideally be 12%, but fine. Let's take 6% only. 47,500 into 106%. It is coming to 50,350 rupees. How much is coming to 50,350? When it is 50,350, the consignment value is more than 50,000. Whenever consignment value is more than 50,000, generation of e-waybill is mandatory. And let me tell you one interesting point. Whenever we talk about consignment value, the value is including GST, not excluding GST. That's it. Simple question. Next. Question number 8, my dear friends. Rule 86B, that is about your 1% to be paid using electronic cash ledger for those whose turnover is more than 50 lakh. Correct, my dear friends? Now see, restricts use of ITC available in electronic credit ledger for discharging output tax liability. That means 99% you can use, 1% should be paid using cash ledger only. List down exceptions to rules 86B. Classic points: whose income tax paid is more than 1 lakh, whose refund is more than 1 lakh, or till date, till last month, you have paid more than 1% using electronic cash ledger. These are the exceptions to Rule 86B. Write that points, get your score. Clear, friends? Second, very, very simple case. List any 3 cases that warrant issue of credit note. Straight answer. There is a reduction in value of supply, or reduction in amount of tax, or the goods are returned. These are all the cases where credit note is required to be issued by supplier to the recipient. And the time limit to declare such credit note is due date of return for September month, following the end of financial year, or date of filing annual return, whichever is earlier. This concept of credit note, debit note is given by section 34 of CGST Act. Then finally, one last question which came in the exam is list the details of outward supplies which can be furnished using invoice furnishing facility IFF. We know that this IFF concept is applicable to those who have opted for QRMP scheme, quarterly return, monthly payment. In order to ensure that receiver will get the credit, they brought this concept of IFF in order to report B2B invoices. And IFF to be reported by 13th of next month. Also brief, list the cases where registered person is debarred from furnishing details of outward supplies in GST 1 of IFF. Somebody, those whose turnover is more than 50 lakh, you are debarred from IFF. Obviously, because this is only for those QRMP is only for those whose aggregate turnover does not exceed 5 crores. And in IFF, what we show is only B2B invoices and B2B credit note. That's it. And this concept of IFF is only for first and second month of a quarter. Getting clarity, friends? So these are the interesting questions which have come up in GST when I talk about from descriptive part of view. And have been clearly given to understand from our students who wrote the exam that MCQs have been quite comfortable and quite easy. So with this note, I conclude November 22 paper as a discussion parameter. Just as a matter of review, I wanted to spend a little bit of time with you guys so that you guys will get a fair idea as to what kind of questions have come in the exam and what is this paper all about. The only thing is that I felt that DCA question was slightly a surprise and that e-invoicing was tested and amendments have been questioned. So this paper have been slightly more of an amendments paper, which I should actually call it. A very interesting paper, all said and done. And I'm sure our students have performed extremely well. And I wish you all the very best, my dear friends. Wish you all success. And I wholeheartedly wish that all of you guys will come out with flying colors. Thank you so much. Take care. All the very best. Stay tuned to Indigolearn. Take care, my dear friends. Bye-bye.